awake, step at a side when we coming. Feel it in your chest, the syllables get pumping. People on the street get panic and start running. Words on loose leaf sheet, complete coming. I jump on my mind, I summon the rhyme, I'm dumping. Healing the blind, I promise to let the sun in. Strip of the dark ways, we march to the drumming. Jump when they tell us that they want to see jumping. Dad, I want to see some fist pumping. List something, take back what's yours. Say something that you know they might attack you for. I'm sick of being treated like I have before. Like the stupid standing for what I'm standing for. Like this war's really just a different brand of war. Like it doesn't cater to rich and a fan of...
All right, welcome to Wide Awake Radio. I'm Charlie McGrath, your host. It is the 30th of January, 2010, the last show for 2010. So welcome to the program. If you're listening and not in the chat room, I think we have, let me check here, about 80 people in there right now. 86 are in there right now. So if you'd like to join them in chat and drop your predictions in tonight, you can go over to wideawakenews.com, click on the Wide Awake Radio link, and you can join the show that way. I'm going to start off the show. It's Thursday, so we had the unemployment report come out, and the first-time unemployment claims for last week. And I'm going to talk about this for a second before I bring David up. David Chu, he's our guest for the hour. But I'm going to start off with a story that happened to me today. A friend of mine who's been following the YouTube channel since day one, I think, she and her husband have a situation where they woke up a long time ago. They woke up in early 2009. You know, they listened to people like Gerald Celente and Peter Schiff, and they were looking at the political landscape, and they decided to use their own brains and their own minds and their own analysis rather than to trust whatever came out from the mainstream media, to trust whatever came out from their so-called representatives, and to fact-check everything. And these are highly educated people. One's a PhD, and the other has a master's degree. And these people, they've decided that they didn't trust everything that came out of the mainstream media. That they decided that all their investments that they had in trusting into Wall Street were not safe because the people who were running them had one agenda and one agenda only, and that is to reap as much reward as possible. And the people down below who were shoveling money towards them, they could care less about these people. Now, early on, she and her husband decided they were going to get into precious metals. They've been richly rewarded for their decision. I think she was in silver at around $950, in gold at $8.50 or $900. But yet still, she calls me today because she's driving to a dinner party. And at this dinner party is going to be family members, and her family members are dyed-in-the-wool blue team members. And they think everything is going to be okay because we had a change in 2008 with the election of our current president, and he was going to fix everything. And they believed when he said we had to make Wall Street healthy before Main Street would be healthy. The family bought it up. They believed all they needed to do was trust in these people, and things would get better. Now, my contention is we didn't have. It wasn't a crisis in 2008. It was an engineered crisis, and the crisis is yet to be revealed. It was a warm-up to the crisis. It was the beginning of this class of grifters who are going to just rip off this country until there's nothing left, not just this country, but around the world. And then the true crisis will be revealed. But people that might be in your friends, your family, your friends, your coworkers, they think that things are getting better because they see things like 11,500 on the Dow Jones. They see things like the unemployment report that came out today that shows 388,000 jobs were only 388,000 first-time claims happened last week. And the reality of it is, this, of course, is orchestrated information. The headline story at wideawakenews.com is how are they manipulating. It talks about how they're manipulating these numbers. The idea that she asked me, what am I going to say? Because I've already received a call from a family member saying, look, things are getting better. We're going to end out the year over 11,000. We're going to end out the year with 388,000. And my sentiment to her was exactly this. Okay, you could walk in there and you could say, look, the 388,000 was a week ending in Christmas. Friday was Christmas Eve. The East Coast was gripped in 30 inches of snow. Not only that, the first time unemployment claims for last week were reported at 388,000, but the actual number of people who showed up or went online to apply was 521,000. It was seasonally adjusted by nearly 200,000 downward. You can argue that if you want to. You can argue the fact that Wall Street's at 11,500 only because we are bailing out the firms who got us here in the first place. There's no other reason why it's at 11,500. If mark-to-market had to happen tomorrow, guess what? Banks would be under overnight. If true accounting practices were implemented on Wall Street like they are in regular businesses, small business across this country, these banks would be exactly what they deserve to be, which is busted. If the Federal Reserve hadn't stepped up and spent trillions and trillions of dollars and issued 21,000 transactions in order to shore up these criminal enterprises that brought us here, this whole system would be done and gone right now. Trust me, I really believe from the bottom of my heart that is going to happen. It's going to happen in this country, but it's not going to happen until they've shifted all of their debt and all of their sin onto the backs of us. Until that happens, they will keep putting out the propaganda. They will keep saying everything's getting better, just give us more and more power, give us a little more time, give us one more round of quantitative easing, give us one more election, give us one more chance to create some kind of fictitious bubble economy, and things will be better. You cannot argue with people who have their heads so far stuck in the sand that they're not going to listen to you no matter what. They will not believe you until there is riots in the street. They will not believe you until they try to access their bank accounts and realize that it's either that it's a bank holiday or the funds are just gone, or they won't believe you until we are in a Weimar Republic situation and the value of their currency is worthless and it's $200 for a gallon of gas and $300 for a loaf of bread. They won't admit that they're wrong, and it's because of pride. It's because they don't want to believe, especially a lot of highly educated people, don't want to believe that they could be led down this primrose path into destruction. So my advice is this. If it's causing problems between friends, family, and coworkers, the only thing you can do is be an example. You are living within your means. You're doing what you need to prepare. You're consistently, you have the same outlook on the economy as you had a week ago. You're not swayed by weekly employment reports. You're not swayed by the mainstream media. You keep your same line going that you've always, or that since you've woken up. You keep the same fervor, the same passion for it, but you don't beat them up over the head with it. Because the fact is, the only thing that's going to happen then is you're going to catch a label, you're going to have a moniker hung around your neck as a tinfoil hat-wearing fearmonger, and that won't help anybody. But as far as demanding that they wake up, it's not going to happen. It's not going to happen for a large chunk of this population until, like I said, it hits them on the head like a sledgehammer. Okay, before I get too long-winded here and we get into the commercial break, I want to bring up our guest. David Chu is a professional engineer who's worked throughout the U.S. for nearly 20 years. In 2008, he wrote a book called No Foreclosures to help America fight the banksters. Oh, hey, I like that. Banksters by delaying the stopping foreclosures. I'll have more information on how to get his book at wideawakenews.com. A couple of his articles have been published over on rinse.com, and I'm going to put his prediction list up on my site tonight. David Chu, thank you very much for sending me this, and thank you for coming on the show.
Charlie, it's an honor to be on your program, on your show. And
well, it's an honor to have you.
Well, I can tell you this, I don't have much time to listen to radio. The only two people I listen to is you and Mr. Jeff Rentz. So,
well, I feel honored to be in such a short list and with such good company. David, I'm looking at your prediction list. I wanted to pull some of your other stuff that you have written. I haven't had a chance to read it yet, but I certainly will. And I love these predictions. And I'm reading this, and I didn't know you were an engineer until I got to the bottom. I thought you were an economist or you had some kind of background in finance. But let's get right into it. Let's do number one before we go to the break. The U.S. will implement QE3 and 4 when the $600 billion of QE2 is not enough. Let's get into that. You see 2011 as you pointed out in this article, matter of fact, I'll dump the article in the break in the chat room. You see, as you pointed out, Bernanke went on 60 Minutes and said it might not be enough. I mean, that's telegraphing it. He couldn't telegraph it any harder if he wanted to. So you're thinking 2011 we're going to see QE3 and 4.
Yeah, and just to kind of back up a little bit, I think we need to really define what is quantitative easing in Sentence 4. And
David, I'm really, really sorry. I got to cut you off. I went a little long on my opening monologue there, so I got the first break going. We're only going to take two, the first one and the second one, then we'll have the entire half hour, just you and I. So we'll get back to the QE 3 and 4 question right on the other side of this break. Please stay tuned to listen to David Chu's prediction for 2011 on Wide Awake Radio. We'll be right back after this. All right, guys, welcome back to Wide Awake Radio. I'm Charlie McGrath, your host. We have 114 in the chat room. If you'd like to join them, go to wideawakenews.com and click on Wide Awake Radio, and you can join the chat. Our guest for the hour is someone I just rudely cut off before the break, David Chu, and he's sharing his predictions with us. We started with number one. The U.S. will implement QE 3 and 4 when the $600 billion of QE 2 is not enough. Already, it is not enough, as admitted by Fed chairman on a 60-minute interview. Expect it won't be called as much in the it won't be called that in the mainstream media. So go ahead, David. Let's cover this first one. You see more quantitative easing coming, when you give me your reason why you think so, and I'm going to give you my reason why I think you're right. It'll be quantitative easing, but they won't call it that. So go ahead.
In the mainstream media, this QE2 and QE1 is meant to do three things. One, to reduce unemployment in the United States. Number two is to avert deflation. And the third purported reason is to end the recession. And we know that from quantitative easing 1, which they spent, the Fed spending to exist in $1.7 trillion buying the toxic debt off of Wall Street, didn't do anything, Unemployment is still high, what it is right now. I don't think the recession has ended except for maybe the banksters on Wall Street. And deflation, well, it depends on which category of items we're talking about. So QE1 didn't work. QE2, $600 billion. It's not going to be enough because the United States is in the terminal phase of its debt creation. I mean, if you were to look at a chart of the United States in terms of its total debt, it has gone exponentially in the last basically decade or so. And so we are at a place where what's happening is that the Fed has nobody else to sell the U.S. Treasuries, the 30-year bonds to the various nations such as China and Japan. So what's happening is that they are buying it themselves, okay? And because of that, I believe that we're going to see in 2011 the Fed's going to be basically monetizing the U.S. debt to the tune of trillions of dollars that they're going to create out of thin air.
I agree, and I think the stated goal on 60 Minutes was to drive down, to keep the long-term interest rates down. They're failing miserably at that, because I believe during that interview the 10-year note was at about less than 2.5%, and now it's sitting. I just pulled it up at 3.36%. It went up a little bit even today. So everything they've done, they come out and say it's for reason A, but really, if you believe that, then you truly are. You'll believe anything, because I agree with you. They're doing this in order to keep the funds flowing into Wall Street. They've spent 2 years working very hard to get their failure made whole and complete, And it's sickening to me. Especially, David, when I get comments or people who say, look, things are getting better, they don't realize that they're getting better only what the mainstream media is letting you see. You know, they're getting better for Wall Street with billions and billions, $140 billion in bonuses. They're getting better on statistics, you know, like the Dow Jones 30, when only, 10% of the companies that there are now were in the original Dow Jones 30. And in reality, if we look at the Dow, 10 years ago it was at this exact same spot. Yet it's hailed as this big success story. So, I agree with you. I don't think they will be able to use the word quantitative easing again. I think there's going to be a lot of blowback in the first part of the year when the new Congress is set. I think we're going to hear that quantitative easing has failed because the stated goal was to keep the rates down. But I think we're going to see an attempt to have outright bond purchases by the Fed. I don't know if it's going to succeed or not. I think there's enough people who are really, really fed up, people like Ron Paul, with seeing this attempt to manage this economy from on high, that it may or may not fail. It might happen just because if they don't do this, they know they will have anarchy in the streets in this country, which, in my opinion, David, I don't know where you stand on this, but my opinion is, let it come apart. Let it come apart. Let's perp walk the people who brought us here and start over with some integrity. So I'm going to jump right to number 2 because I want to make sure we get through all 9 before the end of the show here. Number 2, the major export nations like China, Russia, Brazil, India, Argentina, and others will engage in an increase their non-U.S. denominated trading amongst themselves. And then you go on to say that we'll see the dollar slip into the low 70s or even lower by 2011. So go ahead and elaborate on that a little bit.
This is a very, very important point because international trade, especially in commodities and in oil, is priced in U.S. dollars. And that may seem like not a big deal, but it's a tremendously important point. And the reason is this. For example, if China wanted to buy oil from Iran, what they have to do is they have to pay the Iranians in U.S. dollars, okay? And in order to do that, they actually have to have a reserve of U.S. dollar in their bank account, as it were, in order to pay the Iranians. And so this mechanism of so-called petrodollars allows the United States to print the U.S. dollar out of thin air and be able to give it to the Chinese for their made-in-China goods that's imported to the United States. And it's really a free pass for the Americans, okay? And this deal between Russia and China, this very recent deal where they're going to trade now in rubles and yuan, is very, very significant. And I'll give you an example. Saddam Hussein decided to convert, I think it was like $20 billion of his UN oil fund that the United Nations had held because of the sanctions back in during the embargo. And it was because of that singular action that he became the target of the United States. I mean, he could... Brilliant.
That's a brilliant point, and I'm glad you went there. I want to talk about the other people who decided they were going to try to get out of the U.S. dollar that were a little smaller than Russia and China and what happened to them as well. But we're going to take this last break for the show, David. Hang tight. We're going to get right back into that point as soon as we get back. Please stay tuned for more predictions from David Chu on Wide Awake Radio. We'll be right back. All right, welcome back. I'm trying to cut off the music because I don't want to run out of time. I'm going to give Ancient Legacy gave us a prediction earlier in chat here. We'll see a breakup in the EU in 2011 led by Germany. I think I think that will not be allowed to happen. I think there'll be mad screams for it to happen over there. Germany is the powerhouse of the whole EU area, and they are being taxed and tapped into for EU bailouts more so than any other nation over there. But they're not, powers that be are not going to let them secede. It would be all-out war before I believe that would be allowed to happen. David, I want to get back to your prediction of the U.S. dollar going by the wayside in trading partners. You talked about Saddam Hussein trying to convert some of his wealth in or out of U.S. dollars, and he is dead because of it. But you also see, if you look at the list of the axis of evil, well, it's just coincidental that these are people who do not want to trade in U.S. petrodollar. I could not agree with you more. We have an unbelievable benefit because the world has to convert whatever currency they have into U.S. dollars in order to trade in oil, and everybody needs oil. It is what drives this planet at this point in time. So it does give us free reign to print money to pay off our debt. And when this prediction. This could be the most damning event to happen in 2011 if we had countries like China and Russia just now agreeing to trade in their own currencies. But if this gained traction and other nations jumped on board with this could be the number one damning event that would hurt the United States in 2011, I think.
And you're exactly right. In fact, countries like China and Brazil are also doing that too. And I think that Argentina and China are doing the same thing. So this is going to be a major trend, I think, for 2011. And it's going to be very significant. It's going to really crimp the ability of the United States to completely print its monopoly money and, for the rest of the world to have. So.
What do you see as far as, when you look at the central banksters around the world, they're the ones who are engineering the bailout. They're the ones who are trying to force austerity on the nations by having the citizens of nations, rectify the failure of their cronies. Do you see them letting this happen outside of maybe countries like that we just mentioned, China, Russia, Brazil? You have India listed there. They're somewhat, I guess, an ally of ours, and the president just spent billions of dollars taking, hundreds of top CEOs over there. Do you see problems in the central banking amongst their own top echelon? Is that why? I can't imagine that this would go over. That allowing these countries to get rid of their dollar and get other trade in other currencies unless there's infighting.
Well, let me answer it this way: the best analogy of these fiat currencies, backed by nothing except the fiat of governments, is this. Think of the various currencies, whether it's the euro, the U.S. dollar, or even the Chinese yuan or the Japanese yen, as a bunch of drunken sailors, okay? They're out on a party, out having good fun. And one of them drops, let's say the United States drops, and falls down. And guess what? The other drunken members of the party will pick them up. And that's kind of exactly what's happening with the various currencies. As the United States dollar drops, the other countries, especially the export-driven countries like China, Russia, Brazil, they will also try to devalue their currencies to keep in line with the U.S. dollar. And so this particular scenario is a little bit complicated. It's actually explained in a prior article that I wrote called Currency Wars for Dummies. You can actually Google that. And that explains it a little bit more. But they're to predict what's going to happen to the U.S. dollar. But for all intents and purposes, I think it's going to be going down relative to the other currencies, especially the Chinese yen one.
All right, and that jumps us, retail food prices, double-digit range, 40%, and that's everything from GMO garbage up to organic. Let's spend a little bit of time on this one. That one's already happening. That would just be a continuation. I think your number is too low. When I look at commodities like pork and cotton and wheat. These things have all went up more than 40% in the last year.
Right. I know what you're talking about. There's a chart that talks about the year-to-year increases of wheat, pork, and things like that. But those are wholesale prices, okay?
Mm-hmm.
And what we're talking about here are retail prices that people pay when they go to, Safeway or Whole Foods or McDonald's even. It takes about somewhere around 6 months, thereabouts, for any changes in wholesale prices to be reflected in the retail prices. So I don't think that we're going to get, for example, wheat went up last year from October of 2009 to August of 2009 to August 2010, 74%. That's a very significant change, okay? But it's not going to be reflected in your daily bread that you buy at the groceries, one for one type of deal. The manufacturer going to absorb some of it. You're not going to see the full onset of that price increase. So I think somewhere around 40, 50%. I mean, that's significant. That's a tremendous amount of increase for food that everybody needs to factor into their.
Yeah, I agree with you. And in fact, I've been in the wholesale commodity building material business for about 18 years, and I know exactly what you're talking about. When we see a big spike up at the wholesale end or at the mill end, it takes a while for it to get to the retail end. What I'm hearing from guys in the industry is margins have been, this is across the board. This is in all of retail, and in all of wholesale, and all of distribution. Margins have been slashed over the last 2 years in order to just stay in business. And I think as far as the manufacturing level or the wholesale level absorbing a lot more increase in raw material prices, I think that game is over. There isn't enough margin left there. And matter of fact, I had an article pulled up a little while ago from the CEO of the Gap talking about how cotton prices are going to force these double-digit increases in their retail prices in a lot of their clothing lines, even though they're made in Malaysia or China or wherever. They no longer can absorb that. So I think that will be something certainly that will be a shocking rise in 2011. You're right. We saw minimal increases. I shouldn't say minimal. I mean, everybody who shops for food, which is everybody, notices the price of eggs and milk and things like that have really taken off in the last year. But I think that will also be more pronounced in 2011 because I think margins are shrinking. Number four is something I know absolutely nothing about. Are you Canadian, David?
I am actually. I grew up in Canada.
Oh, I can put a check in my had a Canadian on box because it's been a while since I had a Canadian on. So talk about this one. This is the real estate market in Canada will finally begin to collapse. I think this is something that probably, I'm speaking because I don't know a lot about it. I'm thinking that the listeners don't know a lot about it. I had no idea that the average home in Vancouver was $1 million. That's insane to me. And 70% of before-tax income right now is being, for people of Vancouver, is being spent to pay for mortgages. I mean, that is an absolute recipe for disaster. So elaborate number 4, Canadian retail or Canadian housing market collapse. And I want to give a little add-on to that because I know a lot of people who are now in the building industry who are relying on Canada. Their sales in the U.S. have dried up, but the boom has been going in Canada for quite some time, and so there's a lot of material that is sourced in the U.S. that is shipped into Canada, and this news is going to be devastating for people who rely on that trade. So Canadian housing market collapse. Go.
I was actually there for about 5 months, from July through beginning of December of this year. And I grew up in Vancouver, Canada, so that's kind of my, not my birth city. I was born in Shanghai, but I grew up there, went to school, high school, went to university, so I know quite a bit about it. Vancouver is probably one of the most expensive cities in North and South Central America. You mentioned the $1 million figure. It's pretty close to that. And what's amazing is that it's like deja vu over again for me because when I was living in Santa Rosa, California, the average median home price in California back in 2005 was around $480,000. Okay, and I thought that was ridiculously high. And now, going back to Vancouver after 19 years of hiatus, as it were, to find out the average home is $1 million, I just couldn't believe the Kool-Aid that these people are drinking. To give your listening audience a little background, the reason why it's so expensive there is that a lot of people from China, and prior to that, the Koreans and Japanese came to Vancouver because it's a very beautiful city. It's one of the most beautiful cities, I think, in the world. Came to Vancouver basically, with cash in hand and plunked down, $1 million, $2 million in cash, okay, for real estate. When you have that kind of buying, the price goes up tremendously. And so what's happening today is that the average person, who's not a millionaire, who's working for somebody else, they're paying around 70% of their pre-tax income on their mortgages. And when I wrote my book, No Foreclosures, back in 2008, I did some calculation and figured out that the average Californian back in 2005 was paying about 73% of their after-tax income on their home. And I realized back then that this is totally unsustainable because once you lose a job or you get sick or your hours get cut down, there goes your house. And that's exactly what has happened. And so this real estate bubble in Vancouver, Canada, I believe that it's going to crash when the party lights are turned off by tomorrow, I guess, or the day after tomorrow, New Year's Day. That's when it's going to when the serious stuff is going to hit the fan.
Well, we have a comment in the chat room from Moonshot5. Canada will have a softer landing than the U.S. Still might get tough here. Housing beginning to fall. If your numbers are accurate, and I have no reason to doubt them, 70% of the income pre-tax going to pay a mortgage and $1 million average. No, they won't. It's going to hit hard there too. I mean, I'm assuming they've been living on equity just like we did down here until 2008. So I think they're in for a really, really hard fall.
Well, a couple of things. What they're doing is that they're renting out their homes. The homes in Vancouver are actually a little bit bigger than your typical American homes. They're around maybe 2,000, 2,500 square foot. So what they're doing is they're renting out the bottom floor to the people, for $800 a month or $1,000 a month. That's what's keeping the mortgage payments going as well. But here's the other thing: is that Canada is actually the largest exporter to the United States. I don't know if Americans know this. It's not China. It's Canada. Okay, the trade between Canada and the United States is actually bigger than that of in terms of the export coming south. And so I read a statistic that about 70% of productivity in Canada is dependent on the United States. And you and I both know that the economy of the United States is going south in a hurry. So all those people whose jobs are dependent on selling to the United States, guess what? They're going to be losing their jobs very quickly. And so
and those are like U.S. jobs. Those are good paying. I mean, were good paying jobs for manufacturing in Canada.
So we're going to have to see tremendous unemployment in Canada because of the depression, not recession or double-dip recession that's mentioned in the media. So I really believe that the Canadian market, especially in Vancouver, is going to crash very hard.
Well, that would lead right into number 5. This is another crash, another real estate crash. You think 2011 is going to show a collapse in the Chinese real estate market. I know that there's a lot of people right now that they're shipping money into that market because it is returning. Their double-digit growth in GDP and their return has attracted a lot of capital. But you have on your report here 64 million homes right now are sitting empty in China.
Yeah, I also went back to China recently in September. After not being, I only visited there in 1986, so that's 24 years ago. And what amazed me was the first impression when I got off the airplane at Pudong International Airport in Shanghai. We took a bus in order to get into the part of Shanghai where I was staying. And what was amazing was, as I looked to my right, I saw all these empty condos. We're talking about hundreds, if not thousands of condos, okay, with maybe one light on and most of them with no lights on, okay? So these were totally unoccupied. And so you have this interesting situation where there are around 64 million empty homes in China. We're not talking about foreclosed homes or anything like that. We're talking about homes that investors have bought and are sitting there doing nothing, okay? Brand new homes. And it's just mind-boggling. I'll give you another quick example. I have a relative that has an apartment in Shanghai. He bought it in 2005 for about $88,000 US. Today that apartment is worth $300,000, okay?
Say that again, I missed it. It's worth what?
He bought the apartment in 2005 for $88,000 US.
Uh-huh.
And today that apartment is worth $300,000 US, okay? That's an appreciation of almost 50% per year for the last 5 years. And, you know, even in San Francisco, they'll be lucky to get 20% a year.
Yeah.
Okay. So the flying the ointment is what will the Chinese government do? I mean, they have the money and resources to keep this bubble going, and that may be something that they will do. It's hard to predict that, but left on its own, there's no way for this housing bubble in China.
You know, you said it's like deja vu all over again, and even if what you're describing in China with what's happening there, it is the model. I mean, it's the model of build it up with fictitious value and then collapse it and then, make all the money on the way up. And now I'm talking about the financial system, these titans of finance on Wall Street, making all this money on the way up with these kind of ridiculous, insane 50% a year for a condo in China. That's insane. But it's happening. You know, you're giving us a view of Canada and China, the same thing happening there. I know here in the States, you know, we've had the same thing happen in the building industry where they were just building because money was very, very cheap, and there was this fictitious demand because of cheap money and low interest rates. And not only did you see that in housing, but you saw everybody has a big box, Home Depot on their corner. You know, it was all about growth. Got to keep growing. Got to keep growing. Well, when the music stops, you know, what do you have? You have nothing. You're overbuilt, you're over-retailed, and you have a populace that is sitting there waiting for something to get better. But the media is telling it's getting better, but in reality, it's just waiting for the music to completely stop, and it's all going to come crashing down. And I guess that would lead to number 6. You're going to see rampant inflation throughout China. Now, explain why a little bit as far as the value of the yuan and what you think is going to happen to that and what will happen in China when they do decide to try to raise it and defend it.
I'll do it really quickly, but for those who really want to study this subject in an entertaining way, you know, Google my article, Currency Wars for Dummies. It's also on Rents.com site as well. It gives a really, layman explanation of why this is. And the reason is this, is that China holds, I think it's like $2.65 trillion of foreign reserves as a result of this trade imbalance. You know, China exports more than it imports. So what does it do with all this U.S. dollar and euro that's swishing around in China? Well, the Central Bank of China, what they do is they buy it from the Chinese people, the people that have, the business people that have this money. And in order to do that, what they have to do is they have to create their local currency, the yuan, out of thin air to buy it, okay? So instead of U.S. dollars and euros circulating in China, you have literally many more trillions of dollars of yuan circulating in China. And when that happens, with the growth not being at the level of the growth of the newly created currency, you have inflation. And that's exactly what's happening. And the dangerous part with inflation in China is that you have to realize that China is still a very poor nation. Most people spend up to 50% of their income on food. So if there's a 10%, 20%, 30%, 40% increase in food prices, that is a tremendous devastating effect on these families. We're talking about millions of families here, not just
Well, not only that, it becomes ridiculously, as far as America is concerned, and Canada for that matter, ridiculously expensive to import all the stuff that fills our shelves in Walmart. You know, if they allow their currency to rise to battle inflation, it's going to mean higher prices on everything we buy in the retail sector. Exactly.
China is stuck between a rock and a hard place. To allow their yuan to increase, even I figure about 7% or more, it's going to decimate their manufacturing and export, because they're at a point where they can't because of the thin profit margins these manufacturers have for the iPods and things like that. They'll be at a point where if it goes too much, they just can't manufacture it. They're going to tell Steve Jobs to go to India or somewhere to do it because he can't do it.
I want to jump. We're running out of time rapidly, so I'm going to get away from China and inflation and get down here to number 8, silver and gold. Give me your predictions.
Well, I think that the silver is going to go up much higher than gold because of this viral campaign that started off by Max Kaiser, crashed J.P. Morgan, buy silver. I mean, there are literally people, you know, doing their YouTubes and what they're doing in terms of buying physical silver. And this thing's taken off it's going viral, basically. It's going exponential. And so I think in 2011, silver is going to reach $50, no problem at all. Gold's going to go up too, but not as much in terms of percentage-wise as silver.
So you think we're at $50 for silver in 2011?
At least, yeah.
Okay, that's interesting. I kind of developed an opinion that we might see a pullback when realization sets in that the world economy is in not a recovery. I don't know how else to describe it, but you're right. The Max Kaiser campaign is phenomenal. The shorting position of J.P. Morgan, which I find interesting. I don't know if you've read this article or not. They came out here recently blaming China for their short positions on silver. They're saying China's making them do it. So, as is in vogue right now, they're blaming somebody else for their potential illegal activities. But I thought we might see a jump up in silver and then a pullback because of the industrial value of silver. It's a precious metal and an industrial metal. If the demand on the industrial side wanes, I thought we might see a pullback in it. I don't think we'll ever see $20 silver again. But I hope we see $50 silver because I have some of it. So let's go ahead.
The one thing I will say is that silver, the volatility in the price of silver is much more greater as a percentage-wise than gold or even stock. So you're correct. It could go down to 25 and then go up to 30, and it's a rocky road. Okay, for people who are part of this campaign, what they have to realize is it's for the long haul. Okay, you buy on the dips, so when it crashes to $25 or $20 for that matter, you buy more of the physical silver. Okay, and
right.
So you buy on the dips and keep it until it's $50 or $100 or $500. Who knows where it's going to go?
I agree with your philosophy wholeheartedly. I don't buy it and then look at what it's at by the day. I don't care. I mean, I don't plan on getting rid of it unless it's a matter of life and death. Let's get about 2 minutes left. Let's get the last prediction. Number 9 is you are seeing an outbreak of a major war in 2011. Cover that.
This really ties into the first prediction, as it were. The United States is going to run out of bubbles to inflate. I mean, we've had the dot-com bubble, we've had the housing bubble, and now we have this QE bubble, as it were, quantitative easing. The last bubble that's left to inflate is war. All empires, and I think we can all at least more or less agree that the United States is an empire with, military bases, 170 countries and so forth and so on. The last bubble to inflate is war. Countries go to war when the economies fail. And so I hope that I'm wrong in this prediction, but I think that the saber rattling that's going on between North and South Korea is really to provoke a war there. between South and North Korea. And, this whole thing with Iran is also another potential hotspot. Who knows? It's hard to say, but be on the lookout, be prepared, with the survival food. At least have 3 months of survival food for every member of your family there, so you have an option, so you have the time to think about what to do next.
Well, I know there's a lot of people, David, that listen to the Rinse Network and listen to this program or follow channels like mine on YouTube, who might think that this list of predictions is things we've all been talking about for some time. But as I pointed out in the chat room earlier, you line 100 people up and you give them David Chu's 9 predictions for 2011, and they would sit there with a dazed look in their eyes, like, what are you possibly talking about? Things are getting better. We're not going to be heading into increased prices of food. We're not going to be heading into increased tumultuous times economically. We're in a recovery, for Pete's sake. So certainly the war thing would probably freak most people out, but I happen to agree with just about everything you have on this list. David Chu, I greatly appreciate your time. Thanks for coming on the show tonight. Please send me that Currency War for Dummies to my email, and we'll get that posted. Everybody stay tuned. Jeff Rince is coming up next.